What's up everyone, it's Scotty with MoneyVest. So in this video, wanted to go over 5 areas that I think have a lot of potential. They've already started to see a lot of momentum on the back of rates coming down. We've talked about the interest rates, the yields in the market, and as we are seeing the longer end of the curve, which is the 10, the 20, the 30-year yields come down, these 5 areas in the market are really attractive right now, which I'm going to go over. I've done a very similar video in the past. And since that video, obviously these sectors, these areas that I'm going over have seen a significant rally as well. So we've seen a very nice momentum in the past couple weeks as the rates have continued to come down. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. And of course, you get access to all the benefits, including members-only private videos, Excel spreadsheets, Discord access, trade alerts, trade ideas. Everything is going to be included with the link down below. We'd love to have you on board. And also don't forget to check out the courses, Fundamentals, Technicals, Options, and Psychology course. And that is going to give you lifetime access with Excel spreadsheets, PDF cheat sheets, everything included. And also do connect with me on Instagram. I do post a lot of interesting videos behind the scenes, some of my personal stuff, and of course, portfolio updates. Everything's going to be included. So handle is going to be CASWRP as well. So let's start with the yields, okay? So 10-year yield, as we already know, has been selling off quite aggressively. It is already down from highs of 5% to low 4%. It's down over 18%. The first sector, or the first area, is pretty self-explanatory, and that is going to be the bond market, right? So bonds are going to be pretty self-explanatory as TLT has moved up very nicely. So we've seen a lot of momentum in the bond market. So TLT and TMF have rallied quite a bit. So this right here is a rally of over 16-17%. TMF also up over 56%. This has been part of my trade, my macro tactical trade, and it has done really well. It's up 25 to 30% since I originally bought it. So my cost basis is sub $47, $48. It's almost at 60 bucks now, but it's also now approaching a little bit of resistance. So this is really going to be helpful if and when we see a bit of a pullback and the 10-year treasuries, let's say they go back higher, considering how oversold we right now are. So if you do see a momentum back up to, let's say 4.2.5%, then if you start rolling over, that's going to be very good opportunity, in my opinion, for us to once again reload TLT and TMF, as in 2024 rates eventually do get cut. We see a lot of momentum to the downside for interest rates with the panic buying that I mentioned. There's a lot of potential for bond market to recover very nicely, because this has been the worst bond market sell-off in over 200 years. So that is sector number one. Pretty obvious, pretty logical. If rates continue to drop, the bond market, which is the prices, TLT, TMF, they're going to obviously do really well. The second sector is going to be biotech. So if you take a look at XBI, specifically small cap biotech, once again, what you'll notice is that it's bounced off of that support at 64, rallied over 24-25% from the end of October. Even if you take a look at IBB, which is the biotechnology ETF, but it's a little bit larger cap, you'll take a look, again, a very similar pattern. It has done really well, up over 10 to 11%. Of course, not as much as the XBI, which is small cap biotech, which has underperformed significantly this year. So XBI is still down on a year-to-date basis, 5%. So it's not positive yet, right? So it's seen a significant amount of underperformance in this sector. But I do believe that if rates continue to drop further, if we continue to see more selling pressure with respect to where yields are, so if you continue to see more buying in the bond market and yields continue to drop, biotech is one sector to look into, in my opinion, for 2024, for us to see some pretty strong moves to the upside. At LABU, for those of you who are very risk aggressive, LABU, of course, is going to be another one, which is up 87% from when yields really started falling over and started coming down. Number 3 is going to be small caps, IWM. So IWM is another part of the market, or other area of the market, which is expected to do really well as yields continue to drop. And the reason is very simple. A lot of these companies, over 60% of them, are not profitable and don't have the best balance sheets with floating rate debt. So if rates continue to go up, there is going to be a problem for small caps, which has been the case for most of this year, and of course somewhat last year. So year to date, IWM is only up 4.62%. So it hasn't really seen a lot of momentum so far this year. But again, you'll notice that every time rates come down, we see a lot of money flowing into small caps, because that's actually a bullish catalyst for this part of the market, this area of the market. It's up 15%. And again, for those of you who are more risk aggressive, TNA is another levered ETF. Be very, very careful with levered ETFs. Do your research, do your due diligence on these. Please make sure that you are understanding the pros and cons of trading leveraged ETFs. But TNA, as you can see, is up over 44%, and IWM obviously up 15 to 16%. Now approaching a little bit of that resistance, right? So it's been consolidating sideways for quite some time. So this right here is the overall sort of consolidation, and we've got a huge resistance right over here at 198 sub $200. And this right here is going to be that support sitting roughly at about $162 per share for IWM as well. So lots of potential, although approaching a resistance, like I said, at around 186. So it's possible that we do see a little bit of a pullback if there is a technical bounce on the yields as well. Next one on the list is going to be solar sector, Enphase more specifically. So if you take a look, ENPH has done really well since the middle of November. It has bounced right back up as yields have continued to come down. The stock's up 48%. Not to mention First Solar, so let's take a look. The ticker symbol is FSLR. Now, this stock has obviously not been as strong as Enphase. In fact, yesterday it was down a little bit over 6.5%. But since the beginning of November, it was up a little bit over 27%. And SEDG, Solar Edge, has also seen some momentum back higher from lows of October or lows of back in November. It's up 30 to 40%. But Enphase, as I mentioned already, it's the highest quality company, in my opinion, in the solar sector. And that, of course, is going to also be one of the reasons why it can find a lot of momentum higher if yields continue to come down. Because, again, cost of borrowing coming down is going to make it more easier, more accessible for people to finance solar systems and solar panels, which obviously is going to reiterate that demand for Enphase and the like. And for solar sector to do really well, they have to make it more attractive and more sort of prudent, financially prudent for a lot of consumers that are buying these solar systems and solar panels. Fifth one on the list is going to be cryptos, and cryptos have obviously been rallying pretty hard as well. Looks like the crypto bull market is back. Bitcoin just a little bit over 43,000. And again, you'll notice going back as far as November of last year, basically is when the actual bottom came in, and we have rallied a little bit over 184%. But more specifically, I want you all to focus on here as well. So middle of October, we've seen 4 to 5 consecutive weeks of green with cryptos up 63%. As the yields continue to come down. So this is, again, suggesting a little bit of that risk-on environment in the market as crypto continues to rally hard on the back of, again, other catalysts as well, with the Bitcoin ETF, spot ETF being potentially approved. So there's a lot of excitement and hype around that as well. But there's definitely there's another backdrop to it with respect to yields and how they're dropping lower, which is obviously causing the markets to be a little bit more risk-on. And as a result, Ether and Bitcoin up 50 to 60% in the last 4 to 5 weeks. And finally, I don't have to say it, but technology meaning NASDAQ and more specifically growth, is also an area of the market which is going to do really well, in my opinion, as yields continue to come down. And that, again, is going to be our Magnificent 7 index. So it is pushed up quite well since the end of October. It's up over 18 to 19%. Seeing a little bit of that pullback right now because of that technical overbought conditions and how we are very overextended at the moment. So resistance at 1945, and right now we're slightly pulling back. Support level is going to stay for roughly around 1640 at the moment. So these are 6 sectors, 6 areas of the market that I wanted to go over, which in my opinion have a lot of potential for growth in the future if yields continue to drop. If the 10-year yield, the 20, the 30, or the cost of borrowing continues to come down and yields continue to break down, let's say below 4%, then these 6 sectors that I mentioned, technology, which is high growth, we got cryptos, we got solar, we got small caps, we got biotech, and of course the bond market. These are the 6 that I will be looking into for opportunities as yields continue to roll over. Hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Let me know your thoughts down in the comment section below. And as always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Happy investing. I'll see you all in the next video.